So again, very clear to know that there are already exclusions or exemptions to the electronic tax invoicing requirements. Quickly, I'll make reference to the other very key section, which is section 16(1)(c) of the Income Tax Act. And again, we've seen most people commenting on this process. They fail to capture section 16(1)(c) of the Income Tax Act, which is very critical. Because if you can talk about the income tax validation, to create awareness or even to take a position for or against it, it's good you provide all the relevant sections. And this section is very critical because it is very clear that the section has been there again, and even for just clarification purposes, both section 23A and 12, all of them have been, actually this section 16(1)(c) has been effective from 1st January 2024, meaning all returns which are being filed for the periods after 1st January 2024, those returns need to meet the requirements of this section. So again, it is not a new requirement. I think out there, we need to clarify that we need to clarify the myth that KRA is introducing a new requirement. This requirement has been there effective from 1st January 2024, meaning even if you are filing your manual returns, you ought to have filed them according to the provisions of section 16(1)(c), which says that any expenditure or loss where the invoices of the transactions are not generated from an electronic tax invoice should be disallowed, basically. So, and that is basically what the system is doing. So the system is not doing anything illegal. The system is basically implementing the legal provisions as provided both in the Tax Procedures Act and also the Income Tax Act. So again, it's good to familiarize yourself with that. Then now we can quickly go to the Tax Procedures Act. Rather not the Tax Procedures Act, but the electronic tax invoice, the Tax Procedures Electronic Tax Invoice regulations, which have also mentioned the exclusions in slightly better format than the TPA. Again, emoluments are there, imports are there, investment allowances are there, airline passenger ticketing is there. Not all transport sector, only airline passenger ticketing. So again, I think some of these things either will require further legal amendments to probably refine the transactions, especially if the public and certain persons believe that they have certain challenges. But as we speak today, this is the legislation KRA is currently implementing, and this is what is currently effective. So these are the exemptions: interest, fees charged by financial institutions, expenses subject to withholding tax, that is a final tax, services provided by non-resident person without a permanent establishment in Kenya, and any other exclusion may be provided under section 23A. So again, the list of exempt transactions or exclusions, transactions which are excluded from the requirement of electronic tax invoice, there are very few. Those are the only transactions, by the way, they acted and envisaged to be. But again, as we go by, we'll explain the emerging issues and even how KRA is meeting the public halfway to just ensure that the transition to this filing process is as seamless as possible, even if the law probably has been a bit rigid on some of the transactions. But again, the commissioner is going an extra mile to just ensure, and we'll mention that under the emerging issues. So at this point, we can log in. Let me log into, first, again, come November, I think, again, something which we need to note is in the last, probably let me show you where you can get some of these information. On the KRA website, under News Center, we have something called public notices. And again, the commissioner has issued almost 5 public notices since the end of 2023, just touching on this topic of the need for compliance with electronic tax invoicing by various players in the economy, whether it's the fuel sector, whether it's the non-VAT, whether it's the VAT registered, whether it's the non-resident digital service providers. The commission has actually guided the public enough times in the last 2 years or so, maybe 2.5 now that we're in 2026, we are going almost even to 3, probably 2.5 years. The commission has issued a lot of guidance to the public relating to this issue of compliance with electronic tax invoicing. So it's not that the commissioner today just woke up in November and said that now I feel like implementing. No, it has been a series of constant reminders to the public through various channels. KRA has stepped up its trainings on both iTax, electronic tax invoicing, our engagements with different stakeholders, including ISPAC, the Juakali sector, the MSMEs. I think the conversation in the last 2 years has been very intentional, and I think the intentions of the commission have been very clear on this aspect of electronic invoice. So you can also go to the public notices and just acquaint yourself with some of the public notices from around September, October 2023 to date, and you realize the intention of the commission has always been very clear, guiding the public on how they need to comply with electronic tax invoicing. Okay. Again, on the KRA website, just for your own information, we've seen people always asking where the returns are. If in case you need to have a copy, we encourage everyone when they are filing their returns to always download the return from the website, rather from the iTax portal. But in case probably you have challenges with that, we host our returns under the KRA website under publications. So again, under publications, you can find some of the returns, like the most recent versions of the annual returns are there. We even have the payee simplified. We have the CSVs for the payee return and many others. So again, you can always get much of this information even as you go by. So back to the public notice, which was issued in November 2025. It was very clear. Let's now address on summary what the public notice required the public to do. The public notice communicated the intention that from 1st January 2026, the commissioner will start validating the income tax returns against certain data sets. Some of the data sets we are using, TIMS and eTIMS invoices, gross amounts as per the withholding income tax certificates, and import records from customs. We are still looking into utilizing more data sources and deploying better analytics at the back end to ensure that as much as possible, we are ensuring that everyone is filing the correct return and also having a better and also claiming the correct expenses so that we can have an equitable, fair, transparent and tax system, which and also support our efforts towards taxpayers expansion. So again, those data sets are there. The public notice also guided that the validation will only affect the 2025 returns. Now, by that definition, the 2025 returns do not necessarily mean December year ends. They basically mean any return whose return end period is in 2025. So basically, this will affect all returns ending on 31st January 2025, 28th February 2025, up to 31st December 2025. As long as they are being filed after 1st January 2026, these validations will affect when you are doing the return going forward. So again, it's good to appreciate that. There is also something the public notice communicated, which we expected the public to have taken note, that you are required in the meantime to request for any schedules of TIMS or eTIMS transactions from your respective account managers or the nearest KRA office. This report is available to all your account managers. They can log in and they can enter the return period. They can come and download all your sales from 1st January to 31st December 2025, all your purchases 1st January to 31st December, all your imports, and share with you that information so that you can also start giving you a head start and start doing some reconciliations. I know people already started doing this reconciliation last year and probably even took some corrective action. Just a minute. Yes, so I think that reconciliation has been ongoing for some. So we'll proceed probably from there. You pick some of these schedules. You can engage your account manager. The reports are available. They have been guided accordingly, even through internal communications from the respective teams to provide you and support you with some of these schedules. And I'll also mention what we are working on to provide the visibility to you on your profile without probably having to rely. But for now, if you need that, you can always rely on the account manager to provide some of these, even as you work on enhancing the dashboard. So I think a lot to just set pace and set the legal framework and also the support framework. We can now go back to logging in quickly. so that we can move in a steady manner. Okay, I'll probably use, I don't know if I have a pin which I can use. Okay, we can use this pin. Again, the validations are applying to all returns. All income tax returns, the annual ones. So whether it is the income tax resident return, whether it is the income tax company return, the resident and everything, all these validation, even the partnership return. So all of them will be applicable to this validation. So it's not just the income tax company return, the resident one, the non-resident one, and the partnership for the respective periods. So I'll log in and show you the journey on how to download the return and proceed with filing. Okay. Is that the password? Okay, let me just probably start again. Okay. Okay. So let me log in. And also the public notice made it very clear the validations will be at the point of upload, not necessarily that we are going to pre-fill the return with the sales and purchases. And I think we'll explain that as we go by. So the select taxpayer filing the return, they'll come to file return. Maureen, just confirm again if my screen is still at iTax. Okay. Okay, so we can download the return. We have two enhancements. We have an enhancement which have been done on this profile, totally different from the validation check, which has been also been implemented from 1st January 2026. Some time back last year, we have enhanced the income tax return, I think from around December. And now you have two
you're visible.
options. You have an option. Pardon? Maureen, pardon? Okay. Maybe Ashoka, you can confirm. Am I still audible? So that I don't lose anyone. Okay. Okay. So we proceed. So we proceed with the filing. So there are two ways you can file this return. You can download the blank Excel return. That is how we've been doing it for the previous years. But last year, KRA enhanced the filing process to enhance the user journey, where you can now download an auto-populated income tax company return. So again, that is an option which you can use. And we encourage everyone to use because it will come pre-filled with certain information, giving you a better head start and simplifying the return filing process instead of capturing some of these things which KRA already has. The only details we are not pre-populating now, especially in the income tax company, the partnership, and even the other IT income tax resident and non-resident returns. The only details not being pre-populated now is the item sales and purchases. Those are not being pre-populated, and also the previous year's losses. And also, while I'm at that point, it's just good to remind again the public that even for those who are filing the employment income only return, KRA has simplified the journey, and now the return is fully pre-filled, both the web-based and also the Excel one, which has never been pre-filled previously. So you can have your employment income return pre-filled with all your employment income details. This last year, we've added more fields. In addition to the normal employment income, we are now pre-filling your pension. We are pre-filling your affordable housing levy contributions, you are pre-filling your shift contributions to just make it easier for you. Two things are still yet to be pre-filled in the employment income return. Those are the mortgage interest for your owner-occupied house and also for insurance relief. So those two things probably may be needed to add, but of course we are working around the clock to enhance them to the return. So again, good things for everyone, even as they're filing the 2025 return. Okay, now back to our validation. So you'll come and download the auto-populated IT company return. Once you download it, let me just give you another, you'll download the Excel. It will already come pre-filled with the details. It will come pre-filled with the PIN number. It will come pre-filled with the type of return. It will come pre-filled with the return period. It will come pre-filled with the, if you have an exemption certificate, this question will be yes, and the exemption certificate number will be displayed. It will also come pre-filled with the business type and subtype. So on the basic information, I think those are some of the pre-filled. In the profit and loss, nothing is being pre-filled, whether sales or purchases, but the validations will happen at the point of uploading this return. Again, just good to separate the two aspects. The balance sheet will be pre-filled with zeros, but of course you can delete them where need be, or you can only come and update the specific fields. Like for me, probably I can come and I just maybe capture land and building. Maybe that's the only asset I have, and maybe it was financed by the share capital. So I can come and capture that just where I need it. And the other fields can remain the way they are. Again, as we go, okay, let me move this up now. Okay, so as we go to the next sheet, so that we are just showing you what is being pre-filled, and then we go now to the validations. The further, what else is going to be pre-filled is the installment taxes. Installment taxes will be pre-filled, both the ones you paid using your actual money and also the ones which might have been set off against an installment adjustment voucher. All the installment taxes will be pre-filled, whether the ones paid through actual money or the ones set off against an installment adjustment voucher. So again, that's kind of how the pre-filling will happen. Then we can go to probably the balance of tax. If you've already paid the balance of tax and you are now filing the return after paying the balance of tax, again, it will already come pre-filled with those details. And this will apply to all returns: the income tax company return, the income tax resident return, the income tax non-resident return. The partnership one is not pre-filled with installment taxes and balance of tax because the partnership does not pay taxes, does not pay direct income tax on its own. It's the partners who will pay as per the share of profit. Okay. Then we come to the previous year's losses. We are not pre-filling this for now, but we are working around the clock again to do it because we've seen a lot of you struggling on balancing and capturing the correct previous year's losses. So again, we are putting our effort, much effort around it on enhancing the returns to pre-fill the previous year's losses, and for the individual ones with employment income to pre-fill with insurance relief and mortgage interest, as long as your employer captured those details in the pay return. Okay, and the partnership income for now, we are not pre-filling that, but we are looking towards making further changes to this sheet in future. The tax computation is the tax computation, again, the pre-filling will happen down here, where some of the withholding credits, probably advanced tax, and even withholding income tax, advanced tax, and even withholding rent income will also be pre-filled because these details KRA already has. So again, making this return filing much simpler for 2025 going forward. But even the pre-filling for credits apply for any return you're filing. So please note, this pre-filling does not just affect 2025 returns. Even for those who have not filed the 2020 return, they can always download and it will come pre-filled with some of these details, even the 2024 return. So the pre-filling of the credits, the installment taxes, the balance of tax, the advanced tax, the withholding, the basic information will be pre-filled for any return you are filing going forward. But the validations are the ones which only apply to the 2025 returns being filed after 1st January 2026. So that was a good just recap to again to appreciate some of the changes which are also complementing this enhancement on the validation. Okay, now let's go back to the profit and loss account. So the profit and loss account will allow you as a taxpayer, whether you have audited financial statements or not, you will still be required to file a return. Because even the Companies Act only requires companies with at least 50 million of turnover in a year to probably have audited financial statements. So we have still so many businesses. We have so many businesses who come to file this return using other reports, management, handwritten notes, Excel, which probably even they will not experience some of the accounting adjustments and reconciliations which other businesses will have. So again, it's very clear to also appreciate that. So you'll come and file this return. You'll capture your business income. You'll capture your farming income. I'm just using, you'll capture rental, probably where applicable. Probably you have some FDR somewhere, or you've invested in some treasury bonds or bills, or some FDR with the respective financial list. So there's some interest income you are gaining, and also probably you have other income. So you're not saying everyone should have all that, but this is just for illustration purposes that you can probably, it will support still declaring most of the other transactions. Then now we come to We'll now come, so when you even before you go to the validations for expenses, so that we don't lose anyone, let's now explain the validations the system is going to do when you upload this return with your income. So what is going to happen is the validation, what the system is going to do, and I think some of you have already experienced some of these error messages or system messages guiding you on some of the issues. The return is going to add all these incomes across the different specified sources of income. Then the return is going to validate them against the information the commissioner has visibility of relating to either your team's or e-team's invoices, which have been transmitted as your sales to the commissioner within that return period, or the gross income for the withholding credits. So those are the two parameters currently the validations are working on. But the way we've built this solution, we can always plug in even more data sets and other things to help in validating even more income sources as and when KRA gets visibility. But for now, those are the two things the return is validating: your teams or e-teams invoices, or your withholding certificates gross amounts. So the withholding certificates you received in the year, irrespective of the withholding tax amount, you might have received 3%, you might have received 5%, you might have received 15%. As long as the withholding was not final, we are going to use those withholding credits and pick the gross amount as per the respective withholding credits and add them up as one of the parameters we are going to validate against yourself. Now, the system is going to use the higher of the two. So meaning, even if you did not invoice, but your clients are very compliant at the point of withholding, we are going to use the gross amount as per the withholding certificates to validate the income you are capturing in the return. If your teams or e-teams invoices are the highest compared to the gross amounts as per the withholding certificates, then that is what the system is going to use to validate the income which has been declared in the return. So what I'm taking you through is a happy path. I'll address the emerging issues, accruals, prepayments, deferred income, and all that at the end, so that we don't mix the two. So that is now the validations. We are picking the high of either your teams or e-teams invoices or the gross amounts as per your withholding certificates for the period, and validating them against the income you've declared in the return. And of course, if the system realizes that the income you've declared in the return is lower than what the commission has visibility as the potential income the commissioner believes should be declared in the return, the system, of course, will not allow you to upload the return, and instead it will give a corresponding error message, of course, to guide for you to take corrective action where applicable, and probably capture the correct income, especially probably if you might have left out something. But in case if the income needs to be reduced by virtue of certain accounting adjustments, those ones I'll speak to them at the end of this session, so that you just understand the basic validations, the way they're working. So that is the validations for income. Then we now come to the expenses quickly. Now, expenses, allow me to first, let's refresh our mind, and we go back to the exclusions. So these are the transactions which are excluded from the requirement of an electronic tax invoice. So I'll take you through each one of them and how they have been delivered in the return. So I'll go back to the return. Let's check for emoluments. Emoluments has been captured under 6.5, which takes care of all emoluments under the employment expenses subhead of the profit and loss account. So that section allows you to capture emoluments at its broader scope of interpretation as provided under Section 5 of the Income Tax Act. So that's where you capture the employment expenses under 6.5. Now let's go back to imports. For imports, we separated both imported goods and imported services. Again, I'll show you how it has been delivered in the return. So for imports, if you have any imported goods, this is where you have to come and capture. So even as I continue this, please note it will be mandatory to capture the exemptions as per the specific fields provided by the commissioner. So again, that is the other change which you may probably be aware of in addition to the validations, that for all the exemptions, you must use the specific fields the commissioner has provided. So again, there'll be no luxury to bring imported goods and probably come and claim it under other expenses. When you do that, the system will validate anything captured under other expenses against your teams or e-teams invoices, even if it's salaries and wages. So please, for the exemptions and exclusions, the rule is use the specific fields provided in the return so that the system will not validate those expenses against your teams or e-teams purchases or expenses. So for imported goods, they're up here under purchases, under 2.2.2, under row 15, you'll be able to see imported goods. For imported goods, we are going to validate them against customs. So you're going to validate them against customs. For imported services, there'll be the validation probably will be post-filing validation because we can't say imported services again is very wide. It might be services procured from the non-resident digital service providers. It may be services provided over and above from the non-resident digital service providers and any other imported goods you might have consumed. So again, that is the field you must use to capture all imported goods and other expenditure you've consumed from anyone without a permanent establishment in Kenya, probably meaning even they don't have a PIN. So that is the second. So let me go back again. So imports broken into both imported goods and services, but imports supported from the data from ICMS. And for imported services, you'll capture, but of course, subject to a post-filing validation by your respective account managers or our compliance and audit teams. I believe we'll be very keen to review and confirm that any of these exclusions have been claimed accordingly. So let's come to the third one, investment allowances, including internal accounting adjustments. Let's go back to the return. The return has section E1, sheet E1, and E2, which take care of all that investment allowances and internal accounting adjustments. So again, that one is well taken care of. Let's go to the fourth one, airline passenger ticketing. Where have we provided it in the return? We go back to the profit and loss account under operating expenses, which is the expenses subhead 5. And you realize under 5.2, we have airline passenger ticketing. So again, that is the only field you can use to claim airline passenger ticketing. Otherwise, if you claim it under any other field, especially fields which are not relating to the exclusions or exemptions, again, the rule is the return will add it to the expenses which need to be validated against teams or e-teams. Okay, we come back to the interest and fees charged by financial institutions. I'll pick both at the same time. We come to the subhead for financial expenses. 7.1, we have interest expense. 7.2, we have fees charged by financial institutions. 7.3, commitment fees. 7.4, insurance. Those are the only fields under that financial expenses which will not be validated against an electronic tax invoice. I know people will ask about realized exchange gain and losses. Again, very few people have things relating to realized exchange loss and gain, but I'll address them under the emerging issues after the end of these presentations. So for now, I just want to take you through the main validations. Then we now go to the emerging issues and what you need to do to align accordingly, adapt appropriately, so that you'll be able to be compliant even going forward and not just for last year. So again, those two have been provided. We go back. I think the other remainings, they are not really necessarily to be provided as a specific field, but we've already built the intelligence in the system to accommodate G in one way or another, not necessarily that it must be a specific field. So let's start filling some of our, so you can probably say this person probably had like, yeah, maybe let's say 10 billion of imported goods. Imported services, again, probably they've procured some engineering service from Uganda, or something from China, or something from the US, from the UK, from Latin America, all that. They can also come and claim some of these expenses. I'll just pick a few. Maybe this business, they need advertisement. Yeah, maybe a few directors and employees of the organization have used airline ticketing to conduct to generate taxable income. So again, you can come and claim. Maybe there is stationery and printing. This is just for example, but you'll apply to any other expenses you wish to claim accordingly. Then salaries and wages. Maybe you can say this business has probably that is what they have claimed, and many other things. Interest, maybe they are servicing a loan wholly incurred, and the interest is wholly incurred. The loan was fully taken to generate taxable supplies, or rather taxable income. Maybe as they run the loan, when they're applying for the loan, when they maybe they are running their checkbooks and their accounts, their current accounts, the bank is also charging them some ledger fees, some ITM fees, some check processing fees, and all that. So again, fees charged by financial institutions. Then down here, you can still come and claim your expenses. I know there's always a CSV, which I think most of you have come to like to use because of the import CSV. You can get some of these transactions from your respective accounting systems, download them to Excel, modify the file to CSV format, and import the CSV. So you will still proceed and continue doing that, whether it's for other income or other expenses, you can still use that. But please note, for the expenses side, do not claim any expense which is liable, which is an exclusion or an exemption from the from electronic tax invoicing under the other expenses, because if you do that, it will be added to the amount which needs to be validated against your teams or e-teams invoices. So again, just that is probably what you may also need to note at that point. So what will happen when you're going to upload this return for the aspect of expenses? As I said, the system will confirm if these imported goods you're claiming are actually, they can be validated and they were approved through our customs business system. So that is a check for imported goods, not teams or e-teams, but we're using our customs business systems. Okay. And then we come to now what the system again is going to do for all these other expenses. The system is going to pick all the expenses which are not exclusions or exemptions from electronic tax invoicing. So things like advertisement will be picked. Things like stationery and printing will be picked. I think those two, for my example, will be picked and added together across all the specified sources of income, even if you've claimed them under business, farming, rental, and others. They'll be added together and now validated against your teams or e-teams purchases or expenses. So what is this? What is this something you may need to remember is anytime you incur an expense for a business, anytime you incur an expense liable for claiming in the business, the messaging is you must demand for an electronic tax invoice, and that one is still not enough. You must ensure that your PIN has been captured in the invoice so that when it is transmitted, when you are now claiming your expenses, we are having this pool of your purchases or expenses which have been transmitted with your PIN, and now we can validate them against your e-teams purchases or expenses, your teams or e-teams purchases or expenses for the year. So again, please note, as much as you might have some challenges for last year, but also this training is helping you to know how well to adapt your business, how well to align your operations, whether it is finance, procurement, all those, they need to, and tax functions, they all need to align and ensure that you are reading from the same page. There is a minimum documentation you require before probably a payment can be done to any supplier, and the bare minimum, an e-teams valid invoice should be one of those things all those teams are looking at going forward. Otherwise, every year you come to file, you'll always be having a lot of issues, a lot of unnecessary explanations probably you need to give to the commissioner for the commissioner to allow some of these non-e-teams where applicable. So again, so that is how the validations are happening. So we are not going, when the system is checking your teams or e-team sales and purchases, again, it will not check salaries and wages. Neither will it check the interest expense. It will not check the fees charged by financial institutions. It will not check the airline ticketing. Neither will it check imported services and imported goods. It will not check those expenses because in the backend and in the backend of the system knows these expenses are exclusions or exemptions from electronic tax invoicing. But the only requirement the commissioner needs from you when filing is you claim them in the specific fields. So again, that is good. And we can now proceed. So when you upload, you'll get those error messages when you're filing. So let me take you through the return. Then I'll take you through some of the sample error messages. Then I'll go to the emerging issues. So on the balance sheet, you'll come in and claim some of your expenses, um, rather claim some of your assets and liabilities and capital, rather declare. Then we come to E1. You'll be allowed to claim your respective investment deductions, investment allowances, uh, uh, in different formats. So again, that one doesn't change. E2 will allow you to capture depreciation and other things. We've realized the pre-filled return, it's not coming fully pre-filled with the rates under sheet E2. That is something we're working on. But for you, it's easy to sort out that issue. You just need to come and capture the return period again, and it will update or trigger the macros behind the return. And you should be able now to have the correct tax rates, especially for that sheet where some of them were missing. So let's go back to E2. Yeah, you realize now E2 now has the class A at 25% and class B at 10%. So again, if you realize you have that challenge, even before we sort it out, you can always just trigger and update the macros by capturing the return period again. Okay, let's now come to, maybe let me capture something now. Maybe you had some additions. Maybe there also you had some additions. So we'll allow you the respective, uh, of course, the commissioner does not go for wear and tear. So please note, the return will allow you to claim all the other things also, whether it's depreciation and other things. But of course, the validations now will be done. But for depreciation, it's always a very straightforward thing. Any depreciation you claim here will be reversed automatically in the tax computation. Because the commissioner does not rely on your depreciation, the commissioner relies on the wear and tear schedules as they have provided that how you need to uh, account for loss of usage of an asset through the different rates and provisions the commissioner has provided. So again, that is good. So we come to the summary of the capital allowance. We have a check that when you go to the tax computation, you cannot claim more capital allowance than this amount. So again, those are just checks. So if you have any assets, you must claim them under E1 or E2 as guided by the Income Tax Act. Then we come to installments. I already spoke about it, nothing to capture there. The payment credits already pre-filled. Let's now come to the partnership income. In case this company who is filing this return is a partner in another LLP, a limited liability partnership, then of course you'll be required to declare your share of profit or losses from the other LLP partnership, a limited liability partnership. Of course, you'll capture the PIN of the partnership, the name, and other things. The checks you've put here now is, by the time you come to file this return, the LLP must have updated their registration details to at least capture you as one of the partners. So please note that is the check which has been added. Again, we're just avoiding probably people making mistakes and probably using the wrong sheets again. So that check is there. And also in a subsequent, probably in the next 3 months or so, we'll now be validating and ensuring that if the partnership has filed the return, the partners will be fully required to declare that share of profit at the point of upload, or even in subsequent amendments or additional assessments. So again, to just ensure that we are tying the share of profit from the partnership to the respective partner, for this case, which is a company, maybe an individual, even maybe another partnership probably. Okay. Then we come to the tax computation. Now the tax computation, the P&L is building up. We come to the adjusted profits. Depreciation, as I told you, it's the first things to be disallowed, but the commissioner will require you to come and capture what we call under allowable deductions, capital allowances. So maybe let me come and capture some capital allowances here. You realize if it is different from the amount under the column for summary of capital allowances, the return will notify you. So probably I'll go back and check the summary of capital allowance is 1250. Okay, so that is the amount the tax computation is expecting. 1250. Sorry. So that is it. You realize it as accepted. You can claim less capital allowances again. That one is allowable. Claiming more than what you've declared in sheet E1 and 2 is the one which is not allowed. Let me go back maybe to the profit and loss. I think I'd forgotten something. Sorry about that. The rules for income are you can increase this, you can declare more income than what the commissioner has visibility for. The only time the return, so the return, even if you have never issued an ETIMS invoice in that year, or you don't have any withholding credits, but you've been in business and you're generating income, the return will allow you to capture that income as because the basis of which the commissioner is validating against may be zero. So please note, you can capture more income than what the commission has visibility of. What you cannot capture is a downward amendment of the income, but will be guiding you under the emerging, the next session, which will be the emerging issues on how probably we are looking into accommodating that for select businesses. Again, for the expenses, you can claim less expenses, including the ones which are being supported by an electronic tax invoice or even the other one. So you can always claim less expenses like advertisement, even if you have an eTIMS invoice or a Teams invoice transmitted with your PIN. You can claim less expenses probably because the whole advertisement expense was not wholly incurred to generate taxable income. So again, that rule is there. You can claim less expenses, but on the face of the return, you cannot claim more expenses, having removed the exclusions or exemptions from the summation of the expenses more than what we have visibility of as the expenses transmitted with your PIN by your respective suppliers in the economy. But again, I'll deal with the issues of accrual and unique sectors and what we are looking at under the emerging issues in case people are probably looking at now at that direction. But just know the rule, you can claim less expenses or you can declare more income. So those rules, two cardinal rules affecting both expenses and income on that. Okay. Now we come to the tax computation again. As you're building it up, you can come and you can also come and claim into capture other allowable deductions. But what the return has done is you cannot claim more allowable deductions in this sheet, which have not been declared in the previous sheet. So maybe you may be knocking off something and maybe introducing something, but there is a nexus between the profit and loss account and all the previous sheets, including the previous year's losses, the share of profit of partnership, and the investment allowances sheets with this tax computation. So again, controls are there that no more allowable deductions can be introduced through this sheet which have not been validated or otherwise captured in the previous sheet. So please again note that. So it may be imperative that you capture all your expenses and deductions in the previous sheets and build them up to the tax computation. Okay. With the Finance Act 2025, we have a change where it requires that for all dividends which were distributed out of untaxed profits, you will be taxed at the prevailing corporation income tax rate for that period. That one has been delivered in line with Finance Act 2025. We have other turnovers relating to preferential tax rates. If you're that company, you'll select the respective category under the basic information, capture the correct approval notice number, and of course, proceed with filing. Something else, of course, your credits are building up, your income is building up. Then you'll now come and validate the return. For income tax, the validate button is on the last sheet. So you'll validate the return, go back to the system where you had logged in. I'll not do the actual one, but I'm just come and upload the return, agree to the terms and conditions, and submit. If your return checks out on the first level, where the income you're declaring is more than what the commissioner has, or your expenses you're claiming, which need to be supported by an ETIMS expense invoice, are less than what the commissioner has or equal to. It can be for income, it could be equal to or more. For expenses, it can be less than or equal. That one, the return, and of course, the other checks are checking out. The PRNs are valid. Your withholding credits captured, claimed are also okay. The return will allow you to upload the return. But in case there are some discrepancies, the first three error messages you're going to get are the following. You will now get some of the error messages. Now, these are new ones which have come with the new validation. On the sell side, you'll be told the total turnover of this amount is higher than. So basically, it means this is the amount the commissioner has visibility of. We are not providing the granular level at this time. Anyway, it's also expected you have an accounting system, most of you, or you already have those invoices you've been keeping. But for now, the return will not give you the grade, but it will give you the total and expenses. And this, in case it is teams or e-teams income, not expenses, sorry. In case it's e-teams or teams income, we have already accommodated for credit notes. So we've already accommodated for credit notes on this aspect, and then we'll now be able to allow for, it will now let you know that the income you've declared is basically less than what the commissioner has visibility of. So I'll still come to the emerging issues. You just need to understand what the error message, then we'll come to the emerging issues and still have a candid conversation and guide you accordingly on all the emerging issues which have become standard in the last few sessions we are having. I think they're rotating around 3 or 4 major sub-items, and we'll be taking you through that. Again, now we come to the imported goods. If you are claiming imported goods which are more than what we have visibility of in the customs business system, then of course you'll get that error message. Then again, for the purchases, in case you are claiming more expenses, which must be supported by an electronic tax invoice, then of course you'll get that. And we've made it very clear. The error message tells you excluding the exemptions or the exclusion. So again, we the information which I think which some people are sharing also in the social media space and other channels, it's that KRA is expecting you to validate items against salaries and wages and imports and interest. Of course, that is not true, because you realize I've already shown you the specific fields where you claim the exemptions, and also the system, when you use those fields, the system will not validate them against your teams or e-teams purchases or expenses transmitted with your PIN as the PIN of the buyer. So I think that is just some of the error messages you'll get. I think this other one was just to show you how we are pre-filling some of the you have joined later. Okay, I'm being told my network is a bit unstable. Maureen, just confirm I'm still audible.
Yes, David, you're audible.
Okay, thank you.
Continue.
So,
Yes.
okay, thank you. What we tell you about the employment income only returns, or rather anyone with employment income, you could be a consult, you could be someone with side hustles, but also you're employed. When you're downloading the Excel return, it will have the employment income pre-filled to give you a head start to come and capture the other details now under the profit and loss. So that is also the simplicity and just enhancing the user journey relating to this. And what I just mentioned, we are pre-filling from the employer's pay returns, your pension contribution, we are pre-filling the affordable housing levy. These are the things which really brought a lot of challenges in the last filing, and we've listened to the lessons learned, and we are really picking it up and ensuring the filing experience for 2025 will be top-notch, and you'll have a better experience going forward. So you're pre-filling the affordable housing levy, we are pre-filling the social health insurance fund amount, and also the personal relief. The only thing we are not pre-filling is insurance relief and the mortgage, but we are working on it. We are not saying we'll not pre-fill. By end of March, in the next 1 month, you should be having all those pre-filled. The mortgage interest, if the employer captured that correctly in the return, and also the the insurance relief. So again, that is just for you to appreciate. Now let's come to some of the emerging issues which have been raised in different ways, and these emerging issues are coming from both our internal and external stakeholder engagements, and allow me now to address them before I bring my colleague from e-teams operations to take you through a brief presentation on some emerging issues also, and some solutions which you need to be aware of, which will complement your compliance towards some of these validations, even going forward. So we are having some of the government sector, not all, some of the government sector, especially the national and the devolved units, some of them have not yet transitioned. They are still having a few issues around issuing valid teams and e-teams invoices. KRA is already having a conversation with them. We hope for a better turnaround in this year. But again, we've already accommodated for some of your issues, and in the next few moments, I'll take you through how we've taken care of it. So this will take care of the business licenses, the permits, the parking, all those things you're dealing with government, both at national and devolved. We already have a solution for that. It's not yet ready, but we'll let you know that we're already working on it. And in a future filing season or in the next session, probably we'll be probably displaying some of these enhancements as and when we deliver them. We're also having a problem with the transport sector, whether it is train, whether it is matatu, whether it is taxi hailing, where some are issuing, some are not issuing. And of course, depending on some of the businesses, maybe they use a lot of matatu, they use a lot of train, whether it's GR, and also maybe they use a lot of taxis. Again, there are elaborate interventions around the transport sector again, and this is part of again the feedback we have been getting from November, and KRA is listening and taking into account some of these things, and we'll let you know how we'll still ensure that you are able to file the return, even if you've dealt with some of the government sector and the transport sector, and how you'll not lose your input, your expenses, but probably only for this first year. So again, we are not saying that it's the commissioner's way of easing the transition to this first year of filing, but we expect that come next year, 90% of your issues relating to your suppliers should have been resolved, because it's a very easy exam. You know what KRA is looking out for. KRA requires you to get an e-teams invoice with your PIN for all business expenses or expenses incurred wholly to generate taxable supplies. So on the transport sector, we'll probably be guiding some of you that you need to probably reconsider your transport options where you can to the best of your ability. Probably stop using a certain provider, or insist on a certain provider to give you an invoice. And I think mostly the ones who are using taxi hailing, these are low-hanging fruit. All the taxi hailing, and I'll request Washuka maybe to come later and just comment on some of the engagements we've been having with the taxi hailing firms. I think the major 10 or something, you can tell that they already have a functionality where you can probably get a corporate account and you can get an invoice at the end of the month. So again, it's just switch of habits, aligning your habits, adapting your business processes in a different way. It's not that you stop using Uber, Bolt, Little, or all of them, but you probably have a better conversation with them and get a corporate account. They will invoice you at the end of the month of all the rides you've done. So those are some of the adaptability mechanisms I think you can probably take for, especially for the guys using the taxi hailing. And of course, the other ones, KRA Management is picking up these with the respective players in the transport sector to just turn around some of these. There are already interventions around them, and we just need to fast track and ensure that all these people are issuing a proper tax invoice. For the telcos, some telcos are issuing e-teams invoices, others are probably having some challenges. So again, the same conversation. Identify the telco you are dealing with. Some of the telcos have told us if you need a Teams or e-teams invoice, engage them. They will issue with a Teams or e-teams invoice upon request, probably due to the huge volume of transactions. But again, KRA is really speaking to the telcos that you need to probably do better, and again probably give as many e-teams invoices without even someone asking. I think that is where we are moving. But again, for those who are dealing with telcos for the sake of a business expense, please engage your telco. They will guide you on the best way to get a Teams or e-teams invoice. They have mechanisms to deal with those case by case. Some even say you can go to one of their shops, you can go to one of their distributor shops. So instead of buying, let's say probably airtime for the business through mobile money, you can probably have an arrangement and buy it in bulk, or have a distributor or someone you can engage with, or buy it from us. So again, just alignment. I know it might take some slightly more effort, maybe just to align, but even it is part of you probably just adapting your business processes, because you can probably not continue dealing the same way you're dealing with some of these players, because they already have provided a window, but you just need to tap into the window and get some of these valid teams or e-teams invoices, even including Kenya. Kenya Power on the aspect of prepaid meters. If you have a prepaid meter for a business, engage Kenya Power. They have already, and even for the VAT registered taxpayers, we'd already made it very clear. They can issue some of the items invoices against your prepaid meter if, of course, it meets the conditions, it's in your business, and you are incurring those tokens for the sake of business. So again, please note how you adapt and align with some of these business practices to just reduce your exposure even as you go forward. The insurance sector, again, try align with them accordingly. And of course, conversations are also within KRA, and even certain budget proposals are being put on the table to just ensure how we are dealing with the insurance sector. And I think probably when the finance bill comes out, you'll probably be seeing some of the possible recommendations, which will request government and our National Assembly to consider to just align some of these processes. Okay, now let's come to accruals and accounting adjustment. The I think most least the return has downloaded, has validated, so that's fine. I think I was not uploading, I was just showing that you can do it. Now let me come and address the aspect of accruals, prepayments, deferred income, and all those things, touching on the international financial reporting standards, the international accounting standards, and wherever, and their nexus between aligning the accounting profit to the taxable profit, the issues to do with the adjustments, the issues to do with provisions, and all that. Now, let's probably start addressing some of the issues so that, again, it's very clear. And just for the benefit of the public, KRA continues with a very intensive change management process. It's good to report that yesterday we had a very good session with the ISPAC members, the people who support and who will audit and who will guide most of you, especially if you have limited knowledge. And I believe now their knowledge and understanding of this process is well. And also we are picking more feedback from them. We'll still pick more feedback from you and see how best we can align. So we are in a process of making it a day at a time. So let's come to the aspect of prepayments. And let's just talk about the accounting adjustments in general, which probably you may need to make. So let's start with income. Most of the common issues we've received are relating to, let's say, prepayments, deferred income. Yes, we need to probably make some clarification that not everyone has deferred income. Again, that is something you can take it to the bank. Not every taxpayer has deferred income. In fact, even some of these terms, some of my fellow CPS talk about, there are most of the MSMEs that hawatambui hiyo maneno hata ni nini mnaongelea. So again, and even most of them, they don't do audited financial statements. So they don't even interact with the FRS or anyone, any accounting standards to determine whether income should be deferred or not. For them, their policies, did I invoice? Did I receive money? That is income for the period. For expenses, so again, you realize very different, and most of them are normal businesses with less complexities. So you'll understand where they're coming from. But let's again come to the aspect of all these accounting adjustments, whether it's prepayments, deferred income. As we say, not everyone has them. Now let's come to the second bit. Those who have them, you are having so many transactions where some are deferred, some are prepayment, some require this adjustment. And again, as we say that, we can also confidently say that not all of these people who have deferred income and prepayments will necessarily lead to their income being declared in the return being lower than the one the KRA is having visibility of. And why are we saying that? And it's a fact. You need to look at the net adjustment, the net effect of all your prepayments, deferred incomes, and all those accounting adjustments should be the one determining whether you might need further intervention or use a further sheet in the return to align your income downwards to the accounting income. So again, let's clear it, because we've seen some of the conversations around is anyone with deferred income prepayment must declare less income. That is not true. It's about the net effect of all your prepayments, your deferred income, your accrual, application of accrual concept on your incomes that might determine whether you have to declare less income or not. So again, even if the guys have these, they're not necessarily given that they'll have to declare less income. Now let's come now to the fourth category. You have deferred income, you have prepayments, you have accruals, the cocktail of all those adjustments. I'm still on the income side, and you now need to declare less income. Of course, that's the feedback we've received. What we are working on in the next phase of these income tax validation enhancements you are working on, the following, we are going to take care of all that, where we are going to provide a new sheet, hopefully, where you'll be able to capture your accounting adjustments, both for income and even for expenses. Let me explain even the expenses side before now I come to the interventions KRA is looking at, again, just to meet you halfway, ensure you have a better transition to this new way of doing things. Okay, so let me come to the expenses. You've won a contract, probably. You have been required to mobilize certain resources, and I think a construction contract becomes a better way to explain this. A certain construction company, let's give an example. CRBC, I think, is one of the largest construction companies in the country. They have won a contract to do a certain tender, do a certain road, a certain expressway from X to Y. What they have done, this contract was signed in October, November 2025. CRBC is December year end. So what happens? They mobilize a lot of resources relating to ballast, relating to cement, relating to wherever, a lot of materials. But of course, in their application of accounting provisions and standards, it requires that some of the expenses should be tied to their revenue when they recognize revenue. So what happens? Between November and December, CRBC has accumulated a lot of materials mobilization. Let's even say 1 billion. They have been issued with invoices. Those invoices are forming part of the expenses in this current year of 2025. But the application of the accounting concepts, provisions, guidelines, and standards require them that they cannot claim these 1 billion of these materials because they have to be aligned to the income, of course, so in 2025, the expenses quite high, but of course, they need to claim less. Of course, come 2026, CRBC might wish to claim, now that they have done a certain section of the road, they will bill KENHA, and of course, they will now recognize the income relating to that contract of the construction of an expressway. Of course, they will be required also to claim part of the expenses relating to the contract. So you realize year one, they have more invoices, and year one can be any of your years. So again, but just for illustration purpose. So year one, they have so many expenses they have not claimed. Come 2026, they don't have expenses, and they may need to do certain adjustments to claim certain expenses when they're now recognizing the income, which some of the expenses were incurred in a previous accounting period. So what do? They will be required to be facilitated to claim more expenses in 2026, more than their items, assuming maybe there were even no new tenders, more than their items invoice. But again, probably in 2025, what is the expectation of the commissioner in 2025? That CRBC will not claim the 1 billion, even if it will be part of their invoices available to them. So again, there is that we'll need to, and as I say that, yes, KRA is now looking into, in this phase 2 of the enhancements, how are we addressing the emerging issues around accounting adjustments, accruals, and just application of the accrual concept for both income and expenses and all those things. We will provide a new sheet which will allow you to capture the specific adjustment you want to make, and it will either reduce your income or increase your expenses more than probably what the commissioner has visibility of. And that will just be a bid to help align the accounting profit to the taxable profit. So that is the current phase 2 enhancement we are working on. The return doesn't have it yet, but it's good you appreciate the concept is already there, and the enhancement is being worked on. Now, for the expenses, of course, the system itself will be able to track. So anyone who is going to reduce their income for 2025 because of a deferred income or prepayment, we will require you to capture the year which that prepayment will be recognized as revenue, because it can never be that it will never be recognized as revenue. There has to be a catch in a future period that a reduction of income below what the commissioner has validated has to be realized in a future period. So that sheet will allow you to reduce your income as you align your accounting profit to the taxable profit, indicate the periods. Commissioner will allow which periods you can go in future. I think that will come with the enhancement. Then in that future period, the system itself is going to track the reduction of income in 2025 and load it automatically in that respective year without any human intervention. That is now on the income side. On the expenses side, what is the system going to do? The example of CRBC and the 1 billion of expenses. The system will confirm that for CRBC to say that in 2026, they are claiming some certain expenses, which probably have become initially in 2025, there were balance sheet items or they were WIP, work in progress items, but now they need to move to now being claimed in the expense. Of course, the system will also have to confirm that they did not claim their full e-teams expenses. It's a general rule. It's a worthy expectation from the commissioner that you did not claim your full expenses in 2025. Then we provide you now with that exemption. Otherwise, if you came and claimed your full expenses, including the income, which in quotes, the expenses which in quotes were not supposed to be claimed, then of course in 2026, the commissioner may also want to ask, this one you are adding in 2025, you saying it was coming from 2025, the expenses you are adding above the e-teams invoices in 2026 in return, which you are saying was arising from 2025, commissioner will want to know, did you claim the full expenses or not? Again, so the system, that sheet we are, that adjustment, accounting adjustment or accrual, aligning of accounting profit to taxable profit sheet is going to be provided, is going to be that intelligent to track all these things without human intervention. And again, I think going forward, now that becomes the best way so that no one receives calls, no one says, how come you didn't load the deferred income of 2025? You had said you will be realized in 2026. System will be able to track that. Second enhancement you're working on, for the people who have MRI and TOT, we are going to allow the income which has been declared in the MRI return and the TOT returns in the respective return period you are filing for either ITR, ITNR, IT2C, and IT2P returns. We are going to allow that income to reduce the validation, the income this commissioner will be expecting you to declare in these annual returns. So again, that is a phase 2 enhancement, which is coming in case you have such queries. That is already in progress. Another enhancement you're working on is for these taxpayers in this transition year, this first year of rolling out these radical validation exercise, we are going to provide a sheet for you to capture valid business expenses which you may not have been issued with a TINS or e-TINS invoice, including even probably those ones where you are issued with a TINS or e-TINS invoice, but probably your name was dropped and maybe the supplier or the is not willing to maybe reverse it and issue the correct. We're going to provide that. Again, that's a very clear communication from the commissioner that I'm trying my best to also support your transition to this new way of doing things without necessarily losing sight that we need to all be demanding and requesting for e-teams invoices or teams invoices for all business transactions. So this enhancement is not to say that the commissioner will continue accommodating this. I think it's just that it is a transition period. Most of you may not have been aware of, but the expectation is going forward, everyone needs to enhance their compliance with electronic invoicing provisions, both as a seller and also as a buyer. So we are going to provide that new sheet, which will allow, it will not be a blanket capturing. We will require you to provide details of those manual expenses, whether you're using petty cash, whether you used cash or check, irrespective whether it is a small, medium, or will wish to support that. And of course, the directive from the commissioner is when you attempt to capture anything under those two sheets, which are basically relaxing some of the validations the commissioner has already provided under the main profit and loss account, when you're uploading your return, you will be required to upload supporting documentation to support your accounting adjustments and accruals, or to support all those manual expenses you're capturing, which cannot be supported by an e-teams. So again, that sheet will be very broad. It will take care of so many scenarios which you are currently dealing, even including the capturing of permits, land rates, parking, and all those valid business expenses you might have incurred, but you are not issued with a valid tax invoice. So again, very good to again understand where we are now, where we are moving, but still the overarching objective is we encourage everyone to deliberately align, adapt, and enhance their compliance towards electronic tax invoicing, even if the commissioner is providing some form of relief through some of these sheets to allow you capture some of the valid business expenses. It is important that come 2026, come 2027, you are filing the 2026 return, you should not be having probably 95% of the challenges you had in 2025. And that is just part of the learning curve. We probably hope all businesses will take seriously. Now, again, as I bring the e-teams operations team, all businesses who are having an income between 1 million and 25 million, you're a small business, you're a small farmer. And I think some of us, I think almost so many people do side hustle for farming, probably even including me. When you are doing this, we know there's a challenge, but now the act is very clear. Anyone who is in business and with the exclusions or exemptions of people who are receiving rental income, the professionals with receiving management training and everything liable to withholding, those ones are excluded from this provision. But you can switch to turnover tax. Right? If you are in a business environment where you are having trouble getting invoices from Mama Mboga, let's say a hotel in Embu, you are running a good hotel in Embu, you're having challenges getting invoices from the people supplying you with mboga, with tomatoes and likes that. You can actually decide to move your business to the turnover tax regime if your turnover is between 1 and 25 million, which hundreds of thousands of our small businesses actually fall between that threshold. You can decide to move to the turnover tax regime. Instead, start filing your returns. KRA has provided better channels of filing the turnover tax return, especially for individuals. You can use USSD, you can use KRM service app, you can log into iTax. It's a web-based return, very simple. So basically, KRA has provided better channels even for these small farmers, small businesses, and those people who may not have an issue probably issuing an invoice, but they have an issue with their suppliers giving their invoices, and of course it may be affecting their claiming. You can switch to turnover tax and pay 1.5% per month on your gross income. No need to worry about a lot of your expenses not being supported by items because it is just 1.5% of your gross income. So I think I'll come probably to an end, and I introduced. I think I've covered the main emerging issues. The aspect of transactions with when you are having suppliers who are having turnover of less than 5 million, which is always very tricky. I think in our previous sessions, we've always asked, how can you tell a supplier income is less than 5 million? That is also a very descriptive. There's no unique PIN, there is no unique identifier. So I think, but I'll allow my e-teams operations team to speak to some of the solutions which will support when you're dealing with someone who is having less than 5 million of turnover in a year, including reminding them that KRA has very simplified solutions, even including USSD, where any mama mboga, any boda, anyone even with low literacy rates, as long as they can transact on M-Pesa, they can issue an invoice through *222#. I think that conversation, I'll invite my colleagues from meetings operations to comment briefly on that presentation. Then we'll come back to a joint Q&A probably for a few minutes. But for now, I'll go through the questions and just pick the main categories of anything probably I've not covered. Otherwise, we might refer you to go back to the recording probably and have it go through the session so that again, we don't need to keep repeating things which we've already covered. I believe I've been very elaborate on some of the things, both the current validations and the main emerging issues, but I'll pick a few other things which you might have raised, which probably have not been covered. Back to the Maureen, maybe to bring the e-teams operation, speak briefly on the subject matter on what they intend to notify the public. Then we continue with the joint Q&A. Thank you very much, and we meet after that. Okay.
Yes, thank you so much, Mr. Busaule, even for that very elaborative session we've had with you. Indeed, we have demystified uh, all the um, all the questions and concerns that are coming in, what you have seen on social media or heard on social media, and also what you are getting what you are getting through the chat box as well as the Q&A section. With us, of course, we have our able e-teams operations, Carolina Shuka, Victor. Just confirm that you're in the meeting so that you can proceed.
Hi,
Thank you,
Maureen.
Mary.
Yes.
Sorry, Victor. Thank you, Mary, and good afternoon, everyone. Victor will take us through the presentation. Thank you.
Right. Thank you very much, Madam Oshuka. Mr. David, that was a very heavy but well-elaborated presentation. A lot to learn for sure. So I will be very brief with the presentation on the buyer initiated. Allow me to just share my screen. You can kindly confirm whether you're able to see it.
Yes, Victor, it's visible. Please proceed.
Great. So we have about 4 to 5 slides to just talk about what buyer-initiated invoicing is and reverse invoicing. And just from where Mr. Busaule left it from, it is also speaking into how to deal with, the businesses that have not yet attained the threshold of 5 million and what the law requires of them. So when talking about buyer-initiated invoicing and reverse invoicing, as the name suggests, it's a solution where the buyer raises the invoice on behalf of the seller, and for the seller, it's for them to either approve or reject the transaction for purposes of, confirming whether it's an invoice or it's an erroneous transaction. So this was also introduced with the TPA Amendment Act 2024, which required an invoice to support the transaction even when dealing with the businesses that have not yet attained the threshold of 5 million. So when we speak about this kind of businesses, we are talking about the small businesses, including farmers and just the small traders. So the main difference between the two solutions is when we're talking about buyer-initiated invoicing, the first thing is where they are hosted. So the buyer-initiated invoicing is hosted on eCitizen platform, and you can access it through ecitizen.kra.go.ke and also through the USSD option *222#. And I think for the ones who've interacted with the USSD, there's a carrier option, and when you go to eTIMS, you'll see one of the options is buyer initiated, and once you select that as an option, then you're required to enter the details of the supplier, whatever it is they're supplying to you, and then once you're done, then it shall be reflected on the side of the supplier, but we'll also go through the steps on how to go about buyer initiated invoicing. For the reverse invoicing, it's a bit more complex, and this is because it works if you are conversant with the eTeam solutions. It works similar to the system-to-system integration, where it's the invoicing system that you have that is integrated with KRA for purposes. Please confirm whether you're able to hear me.
Yeah, loud and clear, Victor. Proceed.
Great,
Yeah.
thank you. So sorry for that. So yeah, for the reverse invoicing, it's for a particular, framework, and you'll find that the players in this supply chain, it's very defined and it's very complex, and you'll find because of this fact, it needs approval from KRA. So with the reverse invoicing, there are so many businesses that find this to be very convenient for them, and I'll tell you it's because of the difference in terms of the requirements of the two. But yeah, with that, there is also the fact that it needs to be approved by KRA. So looking at how the buyer-initiated invoicing works, it's as simple as 3 steps, just as from what you can see, accessing the eCitizen portal, right? So they generate the invoice, capturing the details of the supplier, what it is they are offering them, the amount, everything is captured on the invoice. And then step 2 involves the seller getting a notification through SMS that an invoice has been generated. And by following the steps, because the SMS contains the steps in which they are supposed to follow to be able to either approve or reject this transaction based on whatever they see in terms of the values and in terms of whether the transaction is actually genuine. So they follow the steps on *222# and they can easily approve the transaction or reject it. And if they reject it, it could be because of reasons, maybe the amount is not well captured or just the details of the transactions are not according to what they had in mind. So it can be rejected and based on their communication, another one is raised. And if everything checks out, then that brings us to the last step where they approve. And once the seller gives approval of the transaction, then an e-Teams invoice will be generated. And the buyer, the person who initiated the transaction, will get an SMS notification that also contains a link to be able to download the invoice. And even when it's rejected, the same will be made known to the supplier for purposes of establishing the way forward. So maybe a bit on the reverse invoicing. As I mentioned earlier, it requires a system-to-system integration with e-Teams, right? So the billing system that they have in place is what is integrated for purposes of, again, transmission. Integration is also limited to trusted invoicing systems where the various players in the supply chain are well defined and share records of the transaction. So it's a supply chain that is very specific, and that's why it is not just automatic. There's a know your taxpayer that is conducted to ensure that the specific business showing interest actually fits that the requirements of that solution. And once they are approved, then they can proceed to use the solution. Again, it's suitable where the buyer is doing business with numerous small-scale traders or farmers. So it cannot just be where you're dealing with 2 or 3 farmers and then you're opting on using this system. Again, from just what you're saying about its complexity, it's for businesses that are dealing with numerous traders. And finally, important to note is what we have just established, that approval is required from KRA. In addition to that, we also have other simplified solutions, and I believe some of these solutions are not new to you. So we have the USSD option that is availed through *222#, as we've said, and this was mostly designed for the traders who don't have access to internet, and maybe they're using feature phones, the Katululus. So we also had to come up with a solution that allows them to do business, because every person doing business, since it's a requirement for them to generate these invoices, then we also have to, consider them. And that's why we came up with that solution. We also have eCitizen portal, and this is accessed through ecitizen.kra.go.ke. Functions similarly, very similar to the USSD option. The steps are very simple and it's very straightforward. From the feedback that we've been getting from the users, they have confirmed that it's actually very simple. It's a simple system to use. And that's why even for the VAT registered taxpayers, they showed interest that we also want this very simple solution. And now it is open to both VAT and non-VAT registered taxpayers. We also have the newest kid in the block, which is our WhatsApp invoicing, and it's currently awaiting deployment to the live environment. And it involves an interaction between you as a business operator and Shuru, Captain Shuru, the KRA chatbot, and it works very similar to ChatGPT or just any AI platform that you've been able to use, where you just give it a prompt, or rather, it prompts you from information, and it gets all the information that it requires to be able to generate an invoice or just yeah, in this case, an invoice for you. So I've interacted with the with the system, and it's very innovative. I mean, it's very commendable of KRA and the developers to come up with such a solution. Um, there's also eTeams mobile app for both VAT and non-VAT registered taxpayers. And for this one, it's awaiting deployment to the Play Store and Apple Store. So it's available for both iOS users and Android users. And lastly, we have the eCitizen standalone POS, which is still undergoing testing and quality assurance to also just confirm on its performance to ensure that whenever we roll it, when it's ready to be rolled out to the public, then it performs, the performance is optimum. So yeah, those are the few slides that I think I needed to share. I think now you're up to speed with what's going on in terms of the simplified solutions. Yeah, I believe you're now good. So we also have our contact information. You can reach us through email on teamsupport@kra.go.ke. Our physical location is well known to most, if not all of you. We sit at Chequat Towers, that's 7th and 8th floor. And yeah, that brings me to the end of this presentation. I'll welcome back Maureen to guide us on how you're going to go about the Q&A. Thank you very much for listening.
Yes, thank you so much, Victor, even for that elaborative e-teams, especially on the buyer initiated and also the reverse invoicing. Indeed, that was very informative. So even as we go through the Q&A session, as we are going also to welcome back Mr. Busaule to take us through the Q&A session. We have our online viewers who are because now we are streaming this live on YouTube. Thank you so much, even for participating live on YouTube. We are getting as much feedback as possible from YouTube. Thank you so much. Please remember to subscribe to our YouTube channel, that is KRA TV, so that you can be getting pop-ups or even alerts whenever we have such sessions, because we are going to have so many of these just to educate you on matters taxes. With that, Busaule, if you're ready, we can have the Q&A session.
So, thanks, Maureen. Because of time, I'll pick a few common questions, which I think we've already clarified, but they keep on being asked in different ways. And also, as I allow our Shuka and Victor, I've seen quite some small need some clarifications or needed on Victor's presentation, so they can also maybe pick a few clarifications and just answer as a batch after I'm done with mine. I think I've seen a few coming in. We'll try to restrict ourselves to the business of the day, because I'm seeing a lot of people asking things all over, to VAT, to OAV. I think it will just make us go till 7. The subject was mostly that. If you have any concerns, please engage your account managers. They should be able to clarify some of the things which I think you're asking, because they have the answers. But let me start with I know it is not related to this, but let me start with the nil return. I know it's being asked. KRA, as part of its redesign of the filings, its compliance, as rather just implementing a new way of filing this season. The nil, of course, the nil return option is currently deactivated. Not that we don't want anyone to file nil returns, but it's just to allow certain unique support to be issued to certain taxpayers up to 31st March 2026. And of course, you can always come back and file nil returns from 1st April. So again, that is communication which we believe will be coming out probably in slightly more official ways now that you've already realized the menu is missing. I just know that is a deliberate compliance management framework by KRA certain sectors and certain taxpayers better in this filing season, and of course do a stagger of filing. And so yeah, it is something we are testing in this first year and see how it goes. Okay, I'll also pick another issue on there's a lot of questions on Kenya Power. We've already made it very clear, both Kenya Power and the telcos, they have a way of issuing invoices on a case-by-case basis. Please engage them, but someone asked they engage them and someone asked they need approval from KRA. I think I'll be picking that with the large taxpayers office who manage Kenya Power, because for us where we sit, there is no further approval we need. It is Kenya Power to confirm that you are their client for prepaid meters and you need a tax invoice probably, and probably you need to confirm the meter is in your name, because I think that may be probably the issue you need to have probably going forward. And also, someone said for some of the, I think also Kenya Power, the accounts are not in their name, they're in the name of the landlord. I think those are some of the things we need to streamline as a country, as a public, as everyone, that the aspect of paying and claiming an expense in someone else's name under your PIN, I think it's something even the Income Tax Act should not allow, doesn't allow, even before the validation. So I think have the conversation with your landlord. We already had a meeting in Kenya Power. They have provisions where submitters, I don't know, they call them certain names. They can do those submitters in your name as a tenant. And then when you pay everything, whether it is a postpaid line for Kenya Power. So I think some of these conversations is now you to align and adapt better, because your practice may not have been the correct way of doing things, but now you are learning and making things better. There are still a lot of questions being asked on how do we capture non-eTIMS expenses, including licenses, permits, and other things. I'd already covered that. I'd said one of the enhancements KRA is working on is to provide a new sheet which will allow you to capture all these valid business expenses, which you cannot support by TIMS or eTIMS in this first year of rollout. But of course, going forward, the only requirement will be when you upload the return, you will be required to upload the corresponding supporting documentation for all those manual expenses, so that the commissioner can look at them quickly and take corrective action in case probably there is something which needs to be resolved. On the aspect of the T sector, I think I'll allow probably eTIMS operations to comment on this. Maybe they can just, Washuka, maybe you can just mention the ongoing conversations with key players in the T sector. Of course, knowing buyer-initiated invoicing still works for them, but some of them are now inclined more towards reverse invoicing, including the auction of tea and coffee. I think you can comment on maybe the ongoing engagements you're having on the auction of the tea and coffee auction, probably when you come to address some of your other queries relating to that. Okay. I think I see many questions being asked in different ways, but I think just in summary, let's recap. What we've said is, when you're filing the returns for 2025, any period ending in 2025 of a return being filed after 1st January 2026, the validations will apply. When you're claiming the expenses for the exemptions, use the specified fields for those respective exemptions. The system is going to validate your income against your TIMS or eTIMS or your gross income from your withholding certificates. While I'm on that, allow me to make further clarifications that, again, a withholding income tax certificate tax point is not on payment. And I think you can refer to cases which have been even discussed and concluded at the Court of Appeal. I think the case between the Commissioner, Domestic Taxes, and Fintel, it made it very clear. Withholding income tax point, if a supplier issues with an invoice which is liable to withholding income tax, and they issued you in 2023, and you've booked it in your records, then by accrual basis, you need to pay withholding tax within 5 working days. So the aspect of waiting for the payment in 2025-6 for an expense you claimed in 2023, again, you are also not aligning the accounting treatment and especially aligning to that judgment by the Court of Appeal. So meaning, please note on withholding income tax, some of the mistakes you may get in this first year of transition, they are purely not system issues. They are mostly just people trying not to follow the actual. And also please note that when a withholding income tax is paid this year, it's upon the withholder to capture the correct payment date. The payment date is not necessarily the actual payment to the supplier. It is mostly the earlier of either the payment or the date the withholder accrued that expense in their books. That is now when you should be using that. So meaning, if people follow the correct way of doing withholding income tax, even if you are making a payment today for withholding income tax transaction expense, which are invoice which happened in 2023, you ought to capture the 2023 period. When you do that, the system will push the withholding credit to 2023 and not 2026 ledger for the withholding. So the system is very aligned to how if you use the correct payment date, everything falls in place. But anyway, when you come to the expenses again, we'll validate against teams and teams. Items purchases, imported goods, will validate them against ICMS. We've said an enhancement is 2 enhancements, 3 enhancements are actually lined up for. A new sheet to allow you capture manual expenses which you cannot support by teams or e-teams, and yet they were holding card. Of course, the commissioner will validate them after you file, and also another new sheet to capture all the accounting adjustments, accruals, and all that relating to aligning your accounting profit to the business profit. Those 2 sheets will take care of all 95% of the queries being raised in the chat box, because that is all. Most things are just rotating around those 2 issues, and those 2 new sheets we are working on, hopefully they should be ready by end of March latest. We should be able to account and allow you to do that. So I think I've just recapped it and also picked, because I'm seeing a lot of repetition of the same issues we've captured in the training. If you've joined later, please refer to the recording, and so that we don't keep answering the same question more and more again. Okay, back maybe to the e-teams team. I've seen some questions on Victor's presentation, and maybe you can also just add some highlights on probably what you're doing around some of those issues. Okay. Okay, Maureen, am I audible or am I the one who was lost? Okay.
Sorry
Yes,
for that.
you're audible. Yeah, Victor, go ahead.
Yeah, thank you very much. I've also picked a few questions, and I'll also, as requested by Mr. Busaudle, I'll be inviting Madam Moshuka to speak on the taxi hailing services, because there are a few questions around that, and also the engagements they've been having with farmers. So aside from that, there's the question on, is reverse invoicing available on Teams? And the answer is no. We've only availed that solution on eTeams. And for anyone who's interested in exploring that option and you're using the Teams device, you're always welcome to transition to eTeams, and for purposes of achieving that. There's a question on who qualifies to join eTeams. This was coming from a background of dealing with individual consultants. And as has been said, that eTeams is for anyone doing business, right? So for any trader, anyone doing any kind of business, they're required to, onboard on eTeams. So I think those were the main questions I've been able to pick. I'll continue going through the chat box as I welcome Washuka to maybe speak on the 2 areas.
Thank you, Victor, and thank you, David. So once again, my name is Caroline Washuka from KRA eTeams. Thank you all for making time to be here with us this afternoon. I know it's a Friday, so we won't be holding you up for much longer. So I'll just speak on a few areas of interest on buyer-initiated and reverse invoicing. So from Victor's presentation, he's been able to bring out clearly the difference between the two. Buyer-initiated invoicing is readily accessible through eCitizen, so that can be used at any time without any approval required from KRA. For reverse invoicing, that requires approval from KRA because it's limited to those who qualify for that functionality. So the process entails you reaching out to KRA, specifically the eTeams office. We do a process of KYC where we come to understand your business model to determine whether you should be able to integrate with eTeams and be able to do reverse invoicing from your from your end, from your ERP. So we have players who meet the qualifications for reverse invoicing, and mainly those in agriculture sector, for example, industries or large companies who deal with numerous suppliers, such as farmers. So you'll find there are some industries or manufacturers who deal with thousands of suppliers who supply them now with the inputs, be it whatever raw materials or crops that they use now to pre-process and come up with a finished product. So they have been using buyer-initiated invoicing in the interim as we work to very soon roll out reverse invoicing. But buyer-initiated invoicing has its challenges, especially for those who deal with numerous number of suppliers, and reverse invoicing would be the preferred. So for so that process is we are about to go live with it. We have been conducting a pilot and also ensuring that from a data protection perspective, we have covered all, everything is all covered from both KRA side and the taxpayer onboarded on reverse invoicing, because you're going to be the custodian of confidential and private personal information. For example, if you're dealing with thousands of farmers, the information you'll have within your ERP is personal. You'll have ID numbers, mobile numbers, depending on the nature of your contract, you'll even have their specific locations. So that information is confidential, and we just had to ensure that we have a way to safeguard this data, and that the person who is holding this data, that being now the company transacting with these farmers, for example, adheres to the data protection laws. So all that had to be in place first before we could roll out, before we can begin the process of going to market with the reverse invoicing solution. So for those, a lot of questions I've seen also around for taxi services offered by the ride-hailing apps, that is Uber, Bolt, Yego, Wasini. We do have the local entities as well. So as much as Uber and Bolt have the lion's share of the market, we do have local companies that have also are also offering a similar service. So to understand how they operate, when you get into an Uber or a Bolt, the person offering you that service is the driver, the transport service. Uber and Bolt are just offering you a platform on which you request for the ride. So the person who should actually invoice you at the end of the day is the driver. And the invoice you receive on email, you'll see, yes, it is issued from the Uber or Bolt or Yego platform, but in actual sense, the details of who the two parties, because in every transaction there's a buyer and a seller. So the passenger is the buyer, the driver is the seller. So you'll find the details of the seller and you as the buyer, you as the passenger on the invoice. And this is now what we want to have integrated with eTeams for purposes of that invoice being issued on behalf of the driver to be an eTeams invoice. So we have engaged these entities and we are working closely with them to support them in the process of integrating their systems with eTeams, so that the invoices they will be issuing to you via email will be eTeams invoices. And going forward, we expect for 2026, you will be able to support that expense incurred, that transport expense incurred from those ride-hailing entities as a valid business expense. For the traditional taxi service companies, like I don't know if Kenatco still operates, they are locally registered. So for them, they would be able to easily issue you with an ETIMS invoice or an ETR receipt. That one is not a problem. I think, David, maybe I'll just request you. There's an interesting question I've seen someone asking if, for example, if I'm a doctor, can I register for TOT to take care, or rather to handle the issue of expenses which cannot be supported by ETIMS? So maybe, David, I'll request you to weigh in on that. Thank you.
Okay. I think I think I've even seen that question from landlords. For a doctor, it's a bit tricky because I think a doctor, you operate in a doctor being like a professional, you operate probably from an office you've rented. So we expect you to request for rent from the rent should be, your landlord should issue with an ETIMS receipt for the rent you paid to them, whether it is whether it is commercial or whichever arrangement you have with them. Secondly, your other expenses maybe you may need some of the supplies you may need in your household. They still need to have ETIMS. I don't think even a doctor is one of the people who should say that, because the idea is not to get ETIMS to bring your tax liability to zero. I think the idea is you should get ETIMS to support your valid business expenses. And for a doctor, they might have the receptionist, they might have another trainee doctor. All of them, they're under salaries and emoluments. So you realize the profit you remain with should just be liable to tax. But again, it applies for rental. Please note, rent income is an exception for turnover tax. Turnover tax has exceptions relating to anyone receiving rental income, anyone receiving a service which is liable to withholding, management, professional training, and other things. Because why I'm saying doctors may be tricky, some doctors offer locum, they offer certain services to hospitals, they end up being withheld from. So the moment you have withholding in the picture, TOT is out of the window, because you can't pay TOT at 1.5%, but again, your income is being withheld at 5%. It can't work. And I think that's why, and also for rental income, in case you are MRI or something, you can't be paying MRI at 7.5%, yet TOT is at 1.5%. And that's the reason why I think at a wider scope, those two incomes were exempted from turnover tax. I think, yeah. So, but they should. I think the messaging to everyone is, irrespective of the business you are in, try as much as possible to align your business operations and request and get ETIMS invoices for all business expenses. I think that's probably just the message which is going out. Yeah, it may not be easy, and we are aware of it for certain sectors, but it's upon you as a business person to make certain tough decisions where applicable, change the suppliers you are dealing with, and even start doing things in a totally different way. Because even we've seen certain businesses dealing with farmers and MSMEs who have actually implemented a very disciplined way of dealing with that. And the ones, and even the likes of Naivas, I think, and one of the other, and many other supermarkets, they actually started doing this as early as 2024. I can assure you now they should be having one of the highest matching principle of all the expenses. So again, I think it is more of how do you look into the sector you are in, take advantage of the opportunities. But again, we can always encourage, if you are having business income, whether farming business, of between 1 million and 25 million, consider going to turnover tax. It reduces a lot of hassles around the aspect, especially if some of your suppliers are not willing to issue invoices. Because I think as where we speak, from the presentation from Caroline and Victor, KRA has provided simplified solutions. We can't say anyone who can't operate mobile money can't issue an invoice. I think it's now about probably more of willingness rather than ability. And I think we really need to deal now with that aspect. Okay.
Yes, Carol, maybe you can even
maybe Carol, can you just speak to the aspect of the consent? I see, but I think we've already mentioned, but I think just even say the reasoning behind the consent, because I've always seen that even in ASPAC yesterday, one of the panelists said that we should make it open. But making it open works for you until one day someone uses your PIN and to claim an expense of 2 million, and now KRA is following you up, and you don't know the 2 million where it came from. So it's a double-edged sword. When it's your time to claim, you may want it not to have the consent accepted, the buyer initiated by the supplier, the consent by the supplier. But if you're on the other side, then you realize you'll be the one actually asking for consent because, someone could just be probably busy somewhere behind below a tree somewhere in the middle of nowhere, just using IDs and generating. So it's a good safeguard. But I think maybe Oshuko, you can just share into the bit of why they need to have that conversation with their suppliers before they send the consent. Maybe you can just weigh in on that. Because I think most people are sending consents without preparing your suppliers that if you don't issue me with an invoice, I'll use buyer initiated. Okay.
Yeah, yes. I agree with what you're saying, David. That's true. The whole concept around buyer initiated invoicing, yes, it's anchored in law that the buyer has been given powers to raise an invoice on behalf of a small trader who is unable to issue the e-TIMS invoice themselves for one reason or another. But even as much as you have been granted these powers, it should be with some responsibility and some safeguards around it, because it touches very much on data protection, because you are actually inputting someone else's details for purposes of confirming a transaction has happened. And it is expected that this person whom you are doing it on their behalf, they have to have they have to be involved in the process. And them being involved in the process means them giving their go ahead. And they can either accept or decline, depending now on how the information has been captured. If the information is captured incorrectly, they have a right to decline, and then the process is repeated. So it's very important that even before you begin doing buyer-initiated invoicing for whoever it is the small trader you're doing business with, it's important you have this conversation with them and inform them that I've requested you give me an e-TIMS invoice, but because you're unable to, you're facing some challenges, allow me to do it on your behalf. So this is something that and even last week there was an article in the newspapers about it. We were able to give some information around buyer initiated invoicing, that for the time it has been in place, about a year and a half, we have been able to have transactions over 800 million shillings captured through the system. So there's a lot of potential around buyer initiated invoicing, because the small traders are really the ones who are the backbone of this economy. The large industries are relying heavily on these small scale traders and farmers to be able to do their business operations. So buyer initiated invoicing came into place to facilitate business continuity, so that buyer or this industry, or you even doing business, you could also be a small trader doing business with another small trader. You might be empowered because you are conversant with matters of technology, but you may be dealing with someone who is not at the level you are. So we want to ensure that your business continues, that the two of you continue to trade together, and is why we availed buyer initiated invoicing and reverse invoicing. So let us just ensure we use this option in the there are rules of engagement when doing buyer initiated invoicing. So the issue of consent is mandatory, and where it proves to be a challenge, then we encourage you to now seek a supplier. Go to a supplier then who is able to issue the e-TIMS invoice themselves. And those are the hard discussions that business people will have no choice but to make. If you're doing business with a trader who is problematic, not cooperating when it comes to matters of compliance, then you make the decision whether this is someone you still want to continue doing business with, despite them clearly showing that they do not want to comply, while you yourself are compliant. It doesn't make sense. So I think we've just started this conversation on validation of income and expenses for 2026 in January. The even the numbers in terms of the audience we get whenever we conduct this training is also very telling. People are very interested. There's a real thirst for information. And we just would want this conversation to continue even beyond these training sessions. Like when you're in your space with your peers and your other business-minded, like-minded people, have these conversations with each other so that you just ensure that all of you are doing the right thing. It's also all about fair competition, leveling the playing field. We just would want all of you to be at the same place. Thank you.
Okay, thank you very much. I think the message is clear, and we are too bad I can't. I don't know, Maureen or Luca. I can't check any feedback from. Is it the YouTube live? Is there anything probably apart? I believe the issues are almost standard, and probably what you've clarified is critical. But yeah, because it's Friday and we don't want to keep you here. There'll be many other sessions coming. This is not the only session, but we are glad that this is the second session we've done this year, and it has come with more clarifications on your emerging issues, especially aspects to do with claiming manual expenses. Whether by government, transport sector, or any other person, your suppliers, and also the aspect of how do we align accounting profit to taxable profit using that other sheet. Those two sheets, as we said, for the guys joining us later, please refer to the presentation. We can't keep answering your queries in piecemeal. I think it only does justice to you. If you get time, go through the presentation. I think it's almost 1 hour, 15 minutes before even we start dealing with the Q&A. You get the knowledge from the beginning, and now you run with it. Because I think we can answer you one thing, but you still didn't get the other thing, which we expect you to have received going forward. I think we'll continue doing a lot of trainings in February. Try have probably more consistent, probably every week, so that you can always have the luxury of joining whichever. And I think you'll always watch out, follow KRA on our social media, so that if you don't get emails of these invites, you can always be well appraised through the social media platforms of KRA on LinkedIn, X, Facebook, I think all, because I think that's where we are also posting some of these publicity. But for me, I think back to you, Maureen, will not probably, we appreciate, and I think maybe just my last comments, we know it will be tough for some of you, easier for some of you, but how you move towards 2027 is now the decision you need to make today on how you'll adapt, align, and just make your business operations compliant with the provisions of the laws as they are today. I think that will make a very big difference. Let's not belabor much on 2025. 2026 already, the first month is down. You need to make certain adjustments as soon as possible so that, again, you are not in the same place come 2027 when you are filing the 2026 return. Because the validations, the controls, the leeway might be reduced greatly because the commissioner will now be aware that you had the whole year to know exactly what he is expecting you to do. So again, please just do whatever you can to align operations, better collaborations between finance, procurement, and tax, I think, and accounting. I think all of you need to put your heads together and know which supporting documentations going forward you will need to start relying on, especially on payments. And also on buyer-initiated invoicing, just throwing a spanner in the works. It works better when you tie that thing to payments. Don't pay someone, then request them to accept the consent. That one, you might start having problems. The best way to achieve it, try tie it to something. Try to the payment process, accept the consent, I pay you. Don't accept the consent, no payment. As in, at some point, the MSMEs will have to really start doing some of these things and support the businesses who are buying from them, because also we don't want to send a message that if you're an MSME, you should not comply or we should not have visibility of your transactions. So I think with those few remarks in quotes, back to you, Maureen, maybe for any word you need. Some people have been asking about the recording. I think maybe maybe you liaise with CRC and see if now that it's also being streamed on YouTube, I believe there will be a recording on the KRA TV. But Maureen, maybe you can comment if you have further guidance on that. Thank you very much, and happy New Year again, and I wish you guys a happy Furahi Day. Okay.
Yes, indeed, it's a good Friday, even from where we sit. And thank you for keeping us company, to all our viewers who have joined us through YouTube. That is through the KRA TV. Someone was asking for a link, but you just go to YouTube, search KRA TV. It is one of the. This session has been already uploaded as one of the latest posts that you can get on YouTube. So, in the spirit of also consistency, you can also always get such sessions. We do them on a monthly basis for various taxes. That is for pay as you want, but for pay as you want, we do it before 9th, just to enable the newly registered taxpayers to just have a more information on on how to file their pay as you want. Then the rest of the taxes, that is VAT, TOT, MRI, as well as excise. We normally do trainings before 20th, just to allow the also those who are onboarding to have information just before they get to file their returns. That is on or before 20th of the following month. Special thanks to our team's operations, that is Carol Noshuka, as well as Victor Mwangi, for the very elaborative information they are given. In the interest of time, we'll get the Friday. Good